The share price today has taken a massive knock, and that is why it's now no longer just a private matter.
I have a healthy disrespect for the status quo.
How do scandals involving bosses affect the share price at some of the biggest companies that many Australians own? Hello, I'm Rebecca Jones and welcome to the Bloomberg Australia podcast. Today on the show, Australian CEO scandals can cost shareholders, and in some cases the CEOs themselves, millions. Or do they? Angus Whitley covers big business for Bloomberg News and he's based in Sydney. Angus, could you have ever imagined that WiseTech Global would become such a source of reader interest before its boss hit the headlines recently for all the wrong reasons?
Hi, Beck. It's good to be here. I've got to say, I did not expect to be writing about WiseTech every day for a week. It's not a company I cover in huge detail every day, but boy, did it come back with a vengeance last week.
So let's start there. What is WiseTech Global and who is its founder, Richard White?
WiseTech Global is a freight forwarding software company. So its software sort of underpins the movement of freight and logistics around the world. And it's a global company. It was founded by Richard White. He's run it since 1994. And it sort of underpins, it's the grease, if you like, for all the logistics that flows around the world. And so these customers include like DHL, the big freight companies. And before last week, it was worth $41 billion. So it's a giant. Richard White is pretty much the centerpiece of this company. He's the biggest shareholder. He's the co-founder. And he was, at least until last week, the chief executive officer.
What are these allegations that White's found himself in the crosshairs of?
There were so many last week. It was almost, by the end of the week, it was almost difficult to remember them all. But I suppose the first one that really set things in motion was Richard White's attempt to force an alleged former lover and a wellness entrepreneur named Linda Rogan into bankruptcy. And we know that Rogan alleged that White expected her to have sex with him in return for an investment in her company. Now, they've subsequently settled this claim, but that's really what put White in the crosshairs and literally on the front pages. But since then, there have been another, I guess, a flow of allegations, and I'll just go through them strictly in no order. But there was firstly allegations that he had paid several $1 million to an alleged former lover to settle allegations of inappropriate behavior. Now, the key thing about this was that only some of the board was aware of these allegations. Then there were further allegations that White had a relationship lasting several years with an employee at WiseTech and had subsequently bought her a house on Melbourne's waterfront worth $7 million. And that transaction, again, was not disclosed to the board. And lastly, perhaps the most damagingly, was the allegation that from a former WiseTech director that White had been intimidating and bullying in his behavior.
And how's the board responded to that?
Interestingly, White's lawyers, I should say, did not respond to any of these allegations that I put to them in emails. And the response from WiseTech was to start an investigation and to move Richard White into another position. So by the end of the week, after 4 tumultuous days, Richard White found himself stepping aside as chief executive into a new role as a full-time consultant. And the board has subsequently started an investigation into the meat of these allegations, if you like, and we're yet to hear the results of that.
And have they jumped someone else up to the interim CEO posting in the meantime?
That's right, yeah. So there's an interim CEO, that's the CFO, is now the interim CEO, and they've started a search for a permanent replacement to White.
But the point here is that White's still at WiseTech in a different position. Is that correct?
Yeah, it's a curious arrangement. It's not one that I've come across before. White is not leaving the company by any stretch of the imagination. He has would you believe it, a 10-year contract as a full-time consultant, and he has a 2-year notice period, which wouldn't we all love that, a 2-year notice period. And he keeps his annual salary as it was before at $1 million Australian dollars. So it's really it's a significant in the detail of this new contract, in that it's clear he's telling investors, and WiseTech is telling investors, that Richard White is still very much at this company. He even keeps former CEO in his job title.
Interesting. And what has this done to the share price of WiseTech, Angus?
It wiped almost $8 billion off the market value of WiseTech over the course of these 4 days, when these series of allegations were aired. And then remarkably, when Richard White stepped aside, the share price almost recovered all its losses. So by the end of the week, WiseTech was back to almost the closing price that it was when all this bad media coverage started at the end, some 4 days before. So it's almost worth some $40 billion again. And I think that tells us one key thing, that the concern amongst investors was not the allegations, the substance of the allegations, what White may have done or what he may not have done. It was the concern that WiseTech might lose this central figure in the company that knew everything about the product, knew everything about the customers, and was the figurehead and the biggest shareholder after all. So the fact that he was remaining on a 10-year contract was enough to appease investors. The investigation will come later, but most important thing to the market was that Richard White was not going anywhere.
And Angus, how did the street respond to this? What was their advice to investors in WiseTech after this reimagining, if you like, of Richard White's position at the company?
The street concluded that there was no suggestion that White was going to leave the company anytime soon, and so we saw upgrades from Goldman Sachs Group, Citigroup Inc. They were telling investors, buy the stock again. This is a growth story. Remember, this company has gone from $1 billion since its IPO to almost $40 billion. This is one of Australia's best tech growth stories, at least before this scandal. So it was the conclusion of those brokers that it's safe to buy because White was on board again.
So that's what's happening with WiseTech. Angus, I want to now take a more broader look at troubles at the executive level in Australia. What are the people you're talking to for your reporting saying about it? Like, what reasons do they give for these sorts of things happening? And do they have any solutions of how to fix it?
There have been a few explanations. I'm not sure if we have many solutions, but if you look at the kind of reasons that are suggested here, one of them is Australia's geographical remoteness. So we're far from any of the kind of financial and corporate governance hubs where it would be much easier to notice the kind of developments and trends and standards and thresholds for good and bad behavior and the tolerances and how those evolve over time. So in other words, we can find ourselves operating in a corporate governance bubble where we have nothing to benchmark ourselves against. Very difficult to know what is accepted and what isn't, and how things are changing. So that's one reason. Another reason is if you look at us, we're a developed market. We have some of the biggest companies in the world. We're wealthy because we have huge resources industry in particular. So at the same time, we're a small country. We only have 27 million people. So from that population, we have to largely find the people to oversee these companies, the non-exec directors, the boards, the chairs. And that is a small group of people. And quite often they find themselves doing several jobs at different companies. So they're directors at different companies. That makes it hard to rock the boat for some people because directors, if they speak up at one company, they may find themselves missing an opportunity or even losing a job at another company. If you're a chair, would you hire a director who's famous for blowing the whistle for calling out poor corporate governance? You'd be a brave chair to do that. So that's one reason. Shareholder activism has long been criticized in Australia, that they don't tend to do it like they do in America, where they speak about problems on the outside. They tend to do things on the inside. Arguably, that doesn't seem to be working here as it should. For instance, after the WiseTech scandal, we saw that play out over 4 tumultuous days. Only afterwards have we heard that some of the shareholders have been calling for transparency in the succession planning, transparency in the review. It's a bit late for that.
I think, I definitely want to ask you about the regulatory environment that we're operating here in Australia a little later, but I think you do touch on an important point there around good governance and the responsibility of directors and chairmen of boards. They're personally liable when things go wrong too.
They are. That can make it a particularly hard job and a not particularly appealing job as well to some directors. Pleasant job. One other point that has come up as well is you have to look at the regulators of these particular industries that the companies are operating in. To what degree is that regulator resourced? Does it have the powers? Does it have the teeth? Does it have the investigative powers? Is it handing out fines that can really act as a deterrent? And, arguably in some cases, you could say that that's not the case. Star Entertainment was fined $15 million, $15 million for breaches of its contract, still unfit to run at Sydney Casino. Qantas came to a $120 million agreement with the ACCC. That's less than half the figure the ACCC was after. So, you have to look at those powers and legislative powers as well, and the regulatory bodies.
And when we come back, we'll take a look at another CEO making headlines for all the wrong reasons.
We've got a fairly long-term management team, none the least of myself. I've been through all of the downturns. It's not a fun time. I mean, this is the shittiest time to be the MD of the company. I mean, you've got to really carve the costs out of everything you're doing. You look at every single person. We're doing that. We're throwing everything off the deck just to make sure we conserve cash.
And welcome back to the Bloomberg Australia podcast. I'm Rebecca Jones here with Angus Whitley. We just heard there from Mineral Resources, or MinRes as we say, Managing Director Chris Allison, talking at the company's full year results in August. Angus, he does have a point. It is a hard job being a CEO. It really is. Now, look, do not get out your tiny violin. I want to talk to you about what's been happening lately at MinRes because they're also in the headlines recently. Can you tell me a little bit about what's been happening?
Yeah, Mineral Resources, which has been a company which has been in the headlines for a whole load of other reasons. Chris Allison is quite a colourful guy. He's the kind of guy who speaks quite candidly about issues like working from home. He doesn't particularly like it. He wants people in the office, and he's willing to go quite some way to get them to stay in the office, like free childcare. Doesn't want you going out for a coffee. He'll give you the coffees to stay in the office. But he has also landed in some kind of trouble because Mineral Resources is investigating undeclared payments made to companies linked to Allison. And that investigation should be completed by next week.
And what's that done to the share price?
Well, not unlike WiseTech, MinRes shares lost 26% in the space of a week. And we don't yet have the outcome of that investigation.
It is interesting, though, right, to consider how reactive the share price is to their allegations at this stage. So, it'll be interesting to see whether or not it does have a similar bounce to what we saw at WiseTech. Obviously, completely different set of circumstances here. But two events keeping you quite busy, in the matter of weeks. Back to what we were talking about just briefly on governance. I was looking at the Board Diversity Index, and that's actually a co-production of the Governance Institute of Australia, and it found a significant decline among younger directors. That's, those under 50. But what was staggering was that chairs with tenures 20 years and beyond are on the rise. Doesn't seem right, does it? But look, check me on it. How do Aussie companies sit within the broader global context?
Yeah, 20-year tenures, that doesn't make sense, does it?
No.
That goes against everything I've ever learned about corporate governance and refreshing the board. That's incredible. That's going the wrong way.
Yeah.
And if you look at it, there's been a couple of rankings that suggest that Australia's ranked okay. And if you look at sort of the perception of Australia among investors for its oversight, its regulations, its corporate governance, foreign investors often say Australia is a regulated country. It's got good, sound legislation, corporate governance, and industry watchdogs, and all those things that make it a good place to park your money if you're a foreign investor. That may be true, but according to at least some rankings, Australia is not actually improving. For instance, there was a Australian Corporate Governance Association ranking for 2023, and that put Australia on top. with a score of 75%. So that's above Japan, Singapore, Taiwan, Malaysia, Hong Kong. You'd expect that given the recent history in Hong Kong. But what this report highlighted was it's not the rankings that are as important as the direction of travel. And they pointed out that Australia has really not gone anywhere, has not made any advances since 2020, while other countries have maybe gone down, or significantly other countries have improved, which suggests that Australia is not actually making any progress. And equally, that diversity report you mentioned, the 2024 Board Diversity Index, also says there's concerns about stagnating diversity on Australian boards, like the incredible rise in 20-year plus tenures as chair, which doesn't sound good for anybody apart from the chair. So, there's questions, I think, about how long Australia can hold on to this perception as a great destination, as a safe destination to park your money as a foreign investor because of this kind of ranking. Because, well, for lots of reasons, look at all the scandals that we've had in the last few months. So that's not a coincidence. Well, it may be a coincidence, I suppose, but you have to take notice of these things that seem to go against or at odds with the perception of Australia as a safe and regulated market.
It's been an interesting week. One share price taking a dive and then coming back up again. Who knows what will happen with MinRes, but we'll be watching closely. Thank you for joining me, Angus.
Thanks, mate.
And thank you for listening to the Bloomberg Australia podcast. I'm Rebecca Jones. This episode was recorded on the lands of the Wurundjeri and Gadigal people of the Kulin and Eora Nation. It was produced by Paul Allen and edited by Chris Burke and Ainsley Chandler. Don't forget to follow and review the show wherever you get your podcasts and sign up for Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.